Hello everyone. SEBI has recently launched a new category of investment vehicle called as SIF, which stands for Specialized Investment Funds. In this video, I'll explain what SIF is, what are the various types of SIFs, why are SIF required, etc. We are not going to go into the nitty-gritties of each types of SIFs. The goal is to give you a fair idea of what this new investment category is all about so that you can decide if you are interested in any of them. So let's get started. Before moving on, please read the entire disclaimer carefully. So, what is SIF? SIF is a relatively new category of investment vehicles introduced by SEBI that aims to bridge the gap between traditional mutual funds and high ticket investment products like portfolio management services, that is PMS, and alternate investment funds, that is AIFs. They are a formal regulated mechanism for experienced investors to access specialized, high conviction, and complex investment strategies, offering a middle ground in terms of sophistication, accessibility, and regulation. So, what are the various types of SIF schemes? So, there are three types of SIF strategies, which can further be subdivided into total of seven funds. So, let's look at each of them briefly. So the first strategy is called as the equity oriented investment strategies. These SIFs primarily focus on equity and equity related instruments using derivatives to employ sophisticated strategies like long short. Now it could have three types of funds in it. First is the equity long short fund. They invest a minimum 80% in equity and related instruments. It aims to generate returns by taking long positions, that is, buying on stocks expected to rise, and short positions, that is, selling via derivatives on stocks that are expected to fall. Second type of fund in this is the equity X top 100 long short fund. They invest minimum 65% in stocks outside the top 100 by market cap. So it applies the long short strategy primarily to the mid and small cap segments, targeting higher potential alpha but with higher risk as compared to the previous one. And the third type of fund in under the strategy is called as the sector rotation long short fund. These types of funds, they invest minimum 80% in equity across a maximum of four sectors. It strategically rotates investment across sectors based on economic cycles and prospects, using shorting to manage sector specific risks. Okay, so these are three type of funds under this first strategy. Now let's look at the second strategy. The second strategy is the debt oriented investment strategies. These SIFs focus on fixed income instruments and use debt derivatives to profit from changes in interest rates or credit spreads, which is generally not permitted in regular debt mutual funds. There are two types of funds under these strategies. First is the debt long short fund. In this type of fund, the investment is in a variety of debt instrument across different durations. It uses unhedged short exposure through exchange traded debt derivatives to benefit from expected rise in interest rates or debt market volatility. And the second fund under this strategy is called as the sectoral debt long short funds. In this type of funds, the investment is in debt instruments of at least two sectors with a maximum of 75% in a single sector. It allows a focused but diversified approach to the debt market using short positions at the sector level. For example, being short on the debt of the real estate sector. Just this is just an example. Okay, so these are the two types of funds under this strategy. Now let's look at the third strategy, which is the hybrid investment strategies. These SIFs combine both equity and debt using dynamic allocation and long short strategies to generate returns and manage volatility across multiple asset classes. So there are two types of funds under this strategies. First is the hybrid long short fund. They invest minimum 25% in equity and minimum 25% in debt instruments. It offers a multi asset approach with flexibility to take long and short positions in both equity and debt to balance risk and return. And the second fund under this strategy are called as the active asset allocator long short fund. This type of fund do dynamic investment across equity, debt, derivatives, that is REITs, InvITs, and commodity derivatives. This is the most flexible category, allowing dynamic portfolio rebalancing across a wide spectrum of assets based on market conditions and economic outlook. Okay, now let's look at why was basically SIF was required. What was the reason the SEBI came up with this new instrument? So they were introduced to allow experienced investors access to advanced strategies within a regulated pooled investment structure, offering a middle ground between the regulated simplicity of mutual funds and the customized high minimum ticket nature of PMS and AIF. So for PMS, the minimum ticket size is 50 lakh rupees, and for AIF, the minimum ticket size is 1 crore rupees. Okay, but for SIF, the minimum ticket size is 10 lakh rupees, and that too across the strategies of a single AMC. So it's quite easy, so, or I should say quite affordable for the HNIs. Now, SIFs are needed to provide a regulated mid-ticket investment options for sophisticated investors who desire greater portfolio flexibility and advanced strategies than a typical mutual fund offers. So that was the reason why SIF was required. Now let's look at the characteristics and features of SIF. So first is the regulation. SIF is governed by SEBI under the SEBI Mutual Funds Regulations 1996, but as a distinct new category. Okay. Next is the minimum investment. Minimum investment in SIF is 10 lakh rupees per investor at the PAN level across all SIF strategies within one asset management company. This makes it more accessible than the typical 50 lakh minimum for PMS and 1 crore minimum for AIF. Okay. Next is the target investor. Who are the target investor? High net worth individuals, professional investors, and those who understand and are comfortable with higher risk and complex, sophisticated investment strategies. Okay. Next is the investment strategy. It offers greater flexibility to fund managers compared to traditional mutual funds, allowing for advanced and specialized strategies such as equity long short, sector rotation long short, debt long short, active asset allocation. Okay. Next is the derivative usage. SIFs are explicitly allowed to take unhedged short exposure, that is, selling without owning through derivatives, typically capped at 25% of the fund's net asset value. This is a key differentiator from regular mutual funds, which are generally restricted to hedging purposes. Next is the liquidity and redemption. Redemption frequency can be less frequent than daily. For example, it could be weekly, monthly, quarterly, or interval based. And AMC may impose notice periods for up to 15 working days. This is because the underlying strategies may involve less liquid instruments. So, a very, very important point for all those who are interested in SIFs. Seventh is the taxation. This is a plus point for SIF. Taxation for SIF generally follows the tax structure applicable to mutual funds based on the asset class, equity, or debt of the underlying scheme, which can offer tax efficiency benefits over other products like some categories of alternate investment funds or PMS. And finally, the launch eligibility. Only SEBI registered asset management companies that meet specific eligibility criteria, for example, minimum years of operation, minimum AUM, can launch SIF. So, not every AMC can launch SIF. Okay, let's finally see how can someone invest in SIF. So the AMCs that prominently are offering SIF at the moment include first is the Quant Mutual Fund with their platform QSIF platform. They were among the first to launch SIFs. They have launched funds like the QSIF Equity Long Short Fund and QSIF Hybrid Long Short Fund. They are also launching the QSIF Equity Asset Allocator Long Short Fund. Okay. Next AMC which is offering here is Edelweiss Mutual Funds, Alteva SIF. Now they launched the Alteva Hybrid Long Short Fund under this their Alteva SIF platform. Next is the SBI Mutual Fund with their Magnum SIF platform. They launched the Magnum Hybrid Long Short Fund under their Magnum SIF brand. And fourth is Tata Mutual Funds Titanium SIF, which is still not available for subscription. They have filed documents with SEBI to launch the Titanium Hybrid Long Short Fund with the new fund offer expected in November of 2025. So, as you might have noticed, at the moment, there are only very few AMCs which are offering the SIF, and that too, all the types of funds are not available. So we have seen seven types of possible funds, but as we can see, only three have been offered to the subscription till now. So this is still in its very early stage. Okay. So I guess that is all from my side in this video. I hope that you now have a fair idea of what SIF is all about. So that is the purpose of this video. We are not going to get expert by watching this video. The idea was just to give you a fair idea of what the SIF is, so that if you are interested, in SIF, you can pick the type of schemes or strategies or funds that you're interested in, and then you can deep dive in those. Okay, so that is all. Thanks for watching it. Please like, comment, share, and subscribe to the channel. Goodbye for now, and happy investing.